Thank you for joining us this afternoon. My name is Joe Terril, president of Terril and Company, independent wealth managers in St. Louis, Missouri, with approximately $715 million in discretionary assets under advisement. Today is Thursday, December 30th. We have one more trading day left in the year, and we will update you as we end the year on what we expect for economies around the world for next year, as well as investment prices. As always, helping me is Brian Curtis. And Brian, if you're ready, let's start talking about economies and what to expect. We look for economies around the world to improve in 2017. This has nothing to do with the election in the United States. This trend has already been in place and will continue. Europe is in the early stages of recovering. Britain is doing very well in their Brexit, in their recovery. China is okay. So we look for that, plus perhaps 3.5% growth in the United States. Speaking of the election, if the new administration sticks to tax cuts and regulatory reform, we'll be just fine. If they get into imposing trade tariffs and such things, we'll change our mind very quickly, as that potentially could start a trade war. So we look for good growth around the world and increased growth in the United States. On the investment front, it's going to be dominated by several things. The main thing will be dominated by interest rates. Interest rates are going to move higher in the United States, as we've been saying since last summer. We think the 245, 250 yield in a 10-year government bond is more likely to be close to 4% by the time we do this same video next year. We think short-term interest rates that are around 0.5% will be closer to 2%. This is going to be driven by pickup in inflation. Inflation that arguably right now is running around 1.75% in the United States is going to pick up and run closer to 2.5%, 2.75%. This will force the Federal Reserve Bank's hand to raise interest rates, maybe even if they don't want to. So that will be the real determining factor. Stocks are not grossly overvalued, but then again, they're no bargain either. As interest rates move up, it's going to be difficult for stocks to follow because of the increase in interest rates. It'll put a lower capitalization yield on stocks. So even if corporate earnings improve, a lower PE multiple will keep stocks somewhere in the vicinity of what they're at right now. So we do not look for returns from stocks. Bonds absolutely want no part of any bond with any type of duration, any type of maturity that's more than a year. As interest rates move up, bond prices will come down dramatically. So we want nothing to do with any type of bonds. We do like the energy MLPs that are providing close to 9% rates of return that are dependent upon an increase and a pickup in energy production in the United States. We think this is going to happen. We look for oil prices to average around $60 a barrel next year. We look for the United States to become even more of an oil exporter to the balance of the world next year. So there are some things that make sense. We still like the financial institutions. They've had a nice run here at the end of the year, but higher interest rates and less regulation would be very good for the banks. Plus, by the time spring rolls around and they announce what their CCAR plans are and what's been approved by the government, we should see very nice increases in stock buybacks and dividends. There's nothing else for these banks to do with the money other than return it to shareholders, then the amount of money they're returning to shareholders is going to continue to grow. So there are a few other investments that we like, but this probably isn't a venue to discuss them right now. So with that said, Brian, very happy New Year to you and all of our clients and associates. And we'll update a video into the middle of January as soon as we begin to see what corporate profits have done. Thank you very much for joining us this afternoon, and wish everyone the very best for a Happy New Year in 2017. Once again, I'm Joe Terril, President of Terril and Company in St. Louis, Missouri, Private Wealth Managers. And Brian, thank you for all your help, and very best of a Happy New Year.